Hey guys, so took actually a short right now, so yeah, was actually a clean setup. Unfortunately, we had high impact news at 10. That was a bit like a concern of myself, so bit of a concern. That's how you say it, I think. And therefore, I don't want it to really have a high risk in the market and closed right here. So right in basically advance of the high impact news, we had actually not really a high impact and just completed our market maker sell model. So maybe let's talk about what I could have done differently. But first, let's start basically on the daily chart. So we are still in a really strong bearish trend to the downside. We already scrapped daily by sell liquidity right here, and we are now trading into the high time frame gap, and we already did this did that before the opening as well. So right here I also have some quadrants. That's basically the price range from the high right here to the low we had basically formed within our higher time frame gap. So our short-term low in that case. And yeah, we're still really bearish trending. Let's drop to a 50-minute chart. What we have right here is Asia highs and London highs still intact, and also New York open kill zone buy sell liquidity still intact. So really bearish actually. No damage to the session buy sell liquidity in that case. We already sold off within our New York open kill zone buy sell within our New York open kill zone. Sorry guys. And basically had then consolidated right here, engineered sales liquidity right in advance of the higher time frame gap. With the opening we traded lower and then traded higher. And to me that's a bit not the easiest day actually today to frame. So because if we also took a look on regular trading hours, we do have a new open range gap right here of 274 handles to the downside, and basically with the opening we really just retrace back to CE. The wick right here is definitely manipulation to the downside. We don't want to chase anything short term lower in that case with the opening. We have definitely a short term retracement, and therefore we can frame a market maker sell model in here to the downside. So actually in that case, relatively clean trading approach with regular trading hours as well. And basically let's take a look on ES. So ES was quite the same. So we also just traded back to a liquidity pool. In that case, also back to CE, even failed to, so actually respected CE quite perfectly, and sold now off to the downside. What I want to talk about is why we could have been a bit more convinced that we would complete our market maker sell model. So first of all, our higher time frame trend is really bearish, and we are basically trading aligned with regular trading hours. So we're not really doing something really specifically wrong in that case. So we are really following our approach. Yeah, what I already mentioned before, what concerns me is the fact that we did no damage to the buy side. So therefore, it's actually quite clean that the opening opens up, trades lower, takes out sell liquidity, and that's manipulation lower. And then we have a basically that's perfect right here, because we have consolidation, manipulation, no, yeah, basically yes, we have consolidation, manipulation, distribution to the upside. If you frame that basically right here as a market maker buy model, and then a market maker sell model follows. But in that case, because right here we see the market maker buy model is only a retracement, we only trade back into the premium of basically the price range, so only quite a bit above consequent encroachment. We traded into a higher time frame PD array, only scrapped internal buy side liquidity, and therefore the market maker buy model right here is only a retracement, and therefore the market maker sell model, which will follow, is once again aligned with the higher time frame. Therefore we can target external sales liquidity, and we will eventually seek external targets. Therefore we Could have been a bit more optimistic. Really tight range actually, but still managed to make like 102 US dollar. I'm also a bit more aggressive with my P&L right here because I'm really in advance of passing my funded account. So I'm up now 1,150 and I need 1,500. So yeah, with the trade, so holding until here, maybe I would have been already passing my eval. Yeah, I would. But yeah, so that's not my trading approach. But let's see. Yeah, that would have been actually a quite insane trade. So yeah, the 10 a.m. news definitely were concerning myself, and also a bit the fact that we swept every session sell side liquidity but no buy side liquidity so far. And I could basically see the potential that we will eventually see soon some higher time frame retracement. Because even right here on the hourly chart, there's no damage to the buy side liquidity at all. So really trendline liquidity right here. That was a bit of my concern. That's why I basically manage my position way more aggressive than I should maybe. And also what I really don't like is the fact that and also what I really don't like is the fact that we basically have no session liquidity to target. We already swept daily sell-side liquidity, so we can only target intraday liquidity, still external, because we are trading also a market maker sell model in that case, aligned with the higher time frame. Really clean setup in here, basically a ATM model short, 930 manipulation, and then distribution to the downside. So yeah, still really clean, but yeah, once again, also probably already annoyed hearing it, but trading with only one contract is definitely a bit more stressful, because one wick basically back into the fair value gap with 10 a.m. news would just stop me out basically. And yeah, otherwise trading two contracts, I just take a partial at the opening prices, go break even, and then just hold basically for the external target for the higher time frame gap, and that's it. So yeah, it's definitely a bit annoying to not being able to trade in high volatility only one contract, but we will get there. It's only a matter of time. So that's basically the breakdown, the trade breakdown. Yeah, really bearish on the daily so far, and I think I'm basically done trading with that because I'm really up much on the week. That's also why I basically manage my position a bit more aggressive, because I'm already up a lot. I don't want to overextend basically, yeah, holding for too much and expecting too much, basically not getting too overconfident in that case. So that's what I'm trying to say. I think I'm now up 800 on the week, what's basically to me insane. And yeah, so that's basically it. Hope you enjoyed it, hope you learned something new, and see you soon. Yeah, I really did a mistake today, guys. I was basically unable to walk away from the charts, feeling basically FOMO with the first trade basically that I partly missed. And I did a bit overtraded, so yeah, you can see it. It's really difficult to explain a feeling, because I just maybe did not really said it, or could not really yeah, find the right words to explain it, but it really, yeah, it really annoyed me to basically have the perfect short opportunity right here, and then to basically need to close in here because of high impact news, and then to basically miss out on yeah, the perfect market maker sell model, which is our low resistance liquidity run, and which also likely or basically forms near our daily low. And yeah, so that really stuck with me. So I could not really just close my charts. I could not really walk away from them how I should. Even $100 is in that case more than enough. I ended up now losing 147 US dollar. And yeah, it's definitely something I will journal, that we have to walk away from our charts if we realize that the low resistance liquidity run is already presented itself. So that's really important. Yeah, it's just that trading one contract it's really difficult, because you don't really know how to manage it. So and yeah, so what I traded right here, basically we had S&T here in play, so right to the low, the candle, and yeah, I just was basically looking for kind of a retracement, which is not really the way, the trading approach. If we are trending bearish, don't look for longs. So got stopped, went short, overtraded, just emotional, got stopped, went long, closed, I think break even, went long, closed a bit in a loss, or I think I closed in break even and went short, added right here, mitigated, got stopped, went short, took a partial and closed break even. So definitely I was waiting that we would form a that we would re-sweep basically the low right here, because that's really unfinished business in that case, relatively equal low. But yeah, we are just really done on the daily chart trading lower. So we are really already overextended. As you can see, there's no reason for Enki to, or there is no way that our trading approach is to expect always lower prices. So we are already in oversold conditions. We already saw the low resistance liquidity run. We were even part of it and managed to make money. There's no way that we should still look at the charts. So we have to walk away from them. Trading is more about like looking for the low resistance liquidity run. It's not about finding a setup. It's about finding the low resistance liquidity setup, which basically gives you the best risk to reward and also the highest probabilities that you will succeed basically with the trade. And anything in here is basically only noise. So just to bet that we will form one more low to the downside is a bit ridiculous. I was basically marking out right here the Fibonacci extension tool. Yeah, something I would have liked that we just would basically trade back to the minus 0.5 level, also trade into the higher time frame gap with that. Yeah, we did not do that. In that case, it's only the right way, because with that we basically get punished. And it's really something I will journal. We have really, so that's what basically separates consistent profitable traders from non-profitable traders. Because to be part of low resistance liquidity runs is like the one side of trading, but then to be content with enough is the other side. So even if I know that we will form a or just re-sweep the low, I went short in here and I just could have put my stop way higher and just could have committed to the trade, but because we really have to a high volatility, because I'm not really a not trading with a high or huge stop the retracement in here is just too much. So because that's only a high resistance liquidity run, because we already basically expanded already on the daily chart. That's not an expansion, that's just a retracement, and then we will also retrace only higher because we are still bearish trending. But still, that's what we really have to keep in mind. So that's really important to learn. I think because it's so insane. Also regarding P&L and like psychology wise. So before I was basically up 100 bucks, and it seemed so less to me. So basically I only went short here and already bought right here even. So yeah, 52 handles, and we could have, and yeah, what really basically destroyed my mindset basically was what we could have made. So just to target the external low would have been already 200 handles, and that's what destroyed me. So you have to be really aware of the fact that you only want to look for the low resistance liquidity run, and if basically the low resistance liquidity run already presented itself, and we will stop trading. We cannot trade in noise. That's not what we want to trade. Insane. So really, so trading is like, it's a whole different game. So already I could have been already profitable just with my, so I basically know enough, so I don't really have to learn more like trading patterns or some bullshit like that. So yeah, what I mean is like how I read price action is definitely the right approach, and I'm definitely able to make money how I read price action. It's just about psychology. Really is definitely about it. So yeah, I mean, minus 147 is not really such a big deal. So still glad that I did not lose more basically. But you can be really profitable for many days, and then just with one day something really just clicks in your head, and then you're just really like over leveraging, over trading, and you cannot really get away from the charts. I don't know, it's not happening often, but it's like really some really unusual days. But when it happens, it's really difficult. So that's how I blowed my first eval. That's how I blowed multiple paper trading accounts, which I basically managed the rate the same way I would trade a eval account. So I was not just, so I was still basically yeah, being really like, oh, my English sucks right now, but I don't know how to explain it. I managed, like, it was important to me, just I think you understand what I mean. But yeah, that's really, I will journal it, basically FOMO, and we have to learn that we will walk away. We have to learn that. It's, I think, one of the hardest parts in trading, because you can always, you have to basically, because now I'm really focused on P&L due to my eval account, and that's something which I think is really getting to me, why I tend to over leverage, or in that case to overtrade, because I really want to pass my eval account really bad. I really want it, but in that case it's not the right way to just trade more. That's not how you will become profitable. That's not how you will pass a funded or a eval account in that case. So yeah, that's really, I think, one of the hardest lessons to learn. And yes, it's really difficult, that you don't look at candles and see them basically as money, but you look only as candles and look for your trading approach, for your low resistance liquidity run, and for your A+ setup. Basically, that's it. And that's what we had right here, and we managed to make money, what's more than enough. And then we have to walk away, even if it's just only a really small piece of the pie. But in that case, we are just not able to hold for more if we are only trading one contract. So due to the high impact news, I mean, I could have just went break even and hope for the best. I mean, this could have been actually a possibility just regarding the risk to reward, because we could have made a lot. But yeah, I will stop basically trading definitely today, even no matter what happens. So my psychology, basically my mental capital is fried already, and I will have to journal now. I have to rethink what I did today. Yeah.